And we are live, folks. Welcome to this week's Facebook Live. I'll wait for a few of you to hop online and we'll get into it. Must be a little bit slow because we haven't been on here for a good month or 6 weeks. A lot of you might be like, wow, what happened to Birchie? He's out of my algorithm. So, Josh, how you going? Welcome on board. Thank you for the kind words on the haircut. I was getting a similar haircut to yourself and went for the shaveroonie. So I think maybe about a week, maybe about 3 weeks ago, I shaved it with a blade, and then I just went and got a haircut the other day, and yeah, I might keep it short for a while. Who knows? But it's not a bald spot there. It's just all my grey hairs in a patch. So excited to be back, folks. I literally just got back to my office probably about an hour ago, and first time been in the office all year, and I've got all my notes and everything here, and got a lot of stuff to talk and share with you guys. So look forward to a big 2024. Lots of exciting things out there, lots of exciting news happening out there, and lots of opportunities. So hopefully everyone's had a good break. You know, maybe share with us if you want what you've been up to. I've personally been at my holiday house, so I've got a bit of a tan. Been going to the gym every day and walking, and yeah, trying to get fit and you know, have a cool 2024. I've been working on my goals, planning for 2024. Got some really cool personal goals, some really cool business goals, really cool investing goals, and lots of cool stuff that we need to go and achieve. So hopefully you've planned your 2024 and you're taking steps to get closer to that. One of the things for this year is 2024 is an actual milestone year for B.Invested. It's 15 years ago that I started this business, and yeah, this 15 years ago there was very little out there in the world of the internet. No one had a YouTube channel. There was no such thing as Facebook Live. Realestate.com was a thing, but it wasn't a big thing. There was no such thing really as a buyer's agent. I was one of the first buyer's agents out there, and you know, some of the cool things that we've seen over the course of the last 15 years, especially the results from you guys in the community. There certainly wasn't 20,000 investors out there with 6 or more properties in their portfolio. Today, in 2024, there's about 20,000 people with 6 or more properties. So, yeah, just a bit of a reflection over the last 15 years. And this year, 21 years ago, I bought my first property. And thinking back to problems that were in the market, we've just seen the biggest boom in New South Wales. The Sydney market had gone crazy. The average house was probably about 400,000 at the time. And yeah, it's a lot of changes, a lot of things that we've seen over that time. And yeah, excited to see what the next 20 years has. So nice scallops. I don't know what the scallops. What's the scallop? I don't know what you mean there, Felice. Thanks, Lisa. I've been at the holiday house getting a bit of a tan. Paul said, "Do I reach my 80-kilo goal?" The goal was 100 to shave my head. I was a little bit over that, but I thought I'm going to push it. And I haven't got under the 100 kilos, but I've put on a lot of muscle mass. So yeah, I'm planning on getting the ears. Okay, nice big scallops. Yes, big ears. That's it. Yeah, so I'll keep you posted on my sort of health journey. And one of the things, here's one thing, I tried to do the carnivore diet, and it won't make all the vegans happy out there, or all the World Economic eat the bugs and you know, can't eat meat, fake meat type people. But I've been eating the carnivore diet for about 2 weeks, which is pretty cool. And it was a bit hard to get used to start off with, but yeah, it's pretty good now. And I've introduced a bit of vegetable and stuff like that, but predominantly meat. And I think the effects are pretty good on your body. Everyone should give it a shot. Try the carnivore diet. First article for the day. I can see a lot of you folks hopping online now. Little article here. This is sort of a bit about the whole talk of today, because we are entering into a new year, and I said a lot of things that would happen last year that didn't occur, but we're on the eve, and I'd rather be a day too early than a minute too late, as Lynette Zhang would say out there. And here we are looking at a world, still got there's lots of articles here, right? Here's one. Inflation and rents, time bomb, a $500 billion property trust blew up yesterday, which we'll get onto shortly. The world is getting closer and closer for the rates to come back and the monetary policy to turn. So this article is from news.com. Go check it out. Cash rate could drop sooner and more aggressively than forecasted. Just remember, a couple of months ago, everyone was saying they'll go up more, they'll go up more, they'll go up more. Let's get into this one. This will be fun. Analysis. The American and European futures are pricing a deep and imminent interest rate relief. Local futures are much less dovish. So in Australia, they haven't converted to a dovish perspective, which means down. They're still showing higher symptoms here, but European and US. And we all know that when the US changes the cash rate, Australia and all the other countries are following in that. So it says here, according to the markets, Aussie mortgages will enjoy one rate cut this year and not much until 2025. And what have they used in the news, right? You guys would never have seen this chart beforehand, right? But you have seen it because I've been sharing it with you for 5 years. No one was ever talking about this, and this is a 30-day interbank cash rate futures chart. And looking at it, when this dips down on this side, this is like 24 months worth of time here, 18 months, 24 months. Once it starts changing in direction, you can take this end and drag it all the way back here, depending this wave will come in. So everyone needs to keep a closer eye on that. I've been talking about it for a very long time. The cash rate can't sustain where it's at. It will kill the governments, it'll kill everyone that's got debt, and it'll hurt everyone with inflation even greater. But yeah, they're using this chart. It says there's two main reasons for this. First, owing to our more strict lockdowns, the Australian cycle lagged the global by 6 months. Second, the Albanese government unleashed two idiosyncratic inflation shocks not felt elsewhere. It acted too slowly on Ukraine war, energy profiteering in 2022, embedding inflation into everything. So they're still going in with the rhetoric that we've got inflation because of Ukraine. So 2022, come on. We're going to disease X now. We're going to climate crisis even harder. Let's stop talking about Ukraine, please. Then it dropped the immigration bomb on a tight housing market and spiked rents for the past 18 months. They cannot change that migration aspect. They have to keep bringing migrants in, and that will have a severe impact for renters. And if you have two sides of a coin, you have this here. I think it's a USB stick thing. It looks like a vape. It's not a vape. It's on my desk. But if you pull this lever this way, this end sticks up. Pull it this way, that end sticks up. So when they start pivoting, it'll have shocks in other areas. So whilst it's bad there for renters, as an investor, as most of you guys here that are watching, it is a very positive thing. So keep bringing migration in, which is good. It says here, by the end of last year, two blunders comprised of roughly 40% of local inflation, which I think is a load of crap. But anyway, despite these mistakes, earlier and more aggressive interest rate easing than is currently priced in futures is likely coming for 5 reasons. First, the Australian cycle started later, but it's done a lot of catching down to other weak economies. Households especially are under the pump as real incomes crash. This will be exacerbated by slowing and marginally falling property prices. Given that households comprise 70% of economic activity, growth follows. Indeed, per capita recession has been running now for 18 months. Oh, surprise, surprise, right? Who said we'd be in a recession? Who said that would be fun? Second, our sleazy government is working to fix its mistakes with subsidies. These are not sustainable in the long term, but do not need to be. So as long as they can lower the effective inflation rate for rents and utilities, they will register in a weaker CPI. Well, that's the funny thing, right? Because the more subsidies that the government put out, means they have to get the money from somewhere. When they get the money from somewhere, they're getting it from, they're printing that money. That money is coming from loans, it's coming from debt. So it's adding to the government's debt ledger, and it's putting more on that debt bill. And as they put more on the debt bill, the more that those rates go up, the bonds are expensive, and it's going to cause a bigger pressure and basically bankrupt governments around the world, which I will get to in a moment. I saw someone post about it, and I'll get to it in a second. It says here, Chinese economy is falling apart. That's the third thing. Recent news of successful growth rates in 2023 needs to be more accurate. The nominal economy is very weak, and the debt deflation is taking hold as property market crashes. This has knocked down interest rates, currency, and commodities in oil, gas, coal, and green metal markets. Next will be likely meaningful falls in iron ore, applying another deflationary income drain to Australia. Fourth, despite worries about the Suez and Panama canals causing inflation, good prices are still falling globally. Chinese deflation means this is plenty of room to run. Finally, the Albanese immigration bomb is the process of blowing up the working price power. Wage growth is about to slow, and with it, surfaces inflation. Australia is still likely to exit 2024 with higher inflation than other developed markets, owing to the immigration-led housing crisis, but we have a higher inflation target. They can say whatever they want. When you manipulate the currency, you manipulate everything. And I hate to break it to everyone, your property isn't worth what it is because it's the best property in the world. It's worth what it is because they've just printed more worthless dollars, and you need more of them to buy the same thing. So it's yeah, that's the long and the short. Now they're talking about rate cuts, right? When they start coming through, they're talking about they could be 1 or 2 rate cuts. Evidence and history has shown when you pull out those rate packs and look at the RBA rate charts for every time that we've had a downward cycle, they don't just come and bring 1 rate cut. They normally bring 1, 2, 3, 5, 10, and they come down crashing. And most of the time we hit up with lower lows than ever before, and the interest rates don't normally go up higher than where they used to be. This one is an exception, but the more they push it one way, the more the other side's going to stick out, and that's where I think a lot of people are missing that. And if we look at, let's say about property markets falling, I haven't seen property markets falling around the country. I've seen a lot of them still going up. It might be because the markets we're buying in, there's more people pushed into the lower end of the market because that's what they can afford. And it's exciting to see what 2024 has to bring. Just getting to that debt, I was talking about debt beforehand, and Sam always loves posting stuff in here, so thanks for sharing the US debt. Last year it was like 31 trillion when Trump took over. Everyone goes, Trump's going to change the debt, he's going to fix the world and all this, but he's just another puppet they put on the pedestal to be a face piece. They said he was at like 20 trillion worth of debt, and he said he was going to get it under. Then it ballooned out to like 29 trillion or something, and then the guy that's in there now, the geriatric guy, he's pushed it up to $34 trillion. He hasn't done anything, right? The system is just compounding that, right? And then as they roll this debt over, it was only 6 months ago that it was pushing through $33 trillion. So that's $1 trillion in 6 months, right? $1 trillion over $30 trillion, that's like 3% every 6 months. It's just going up at a more faster and rapid rate. There's no way that they can ever pay down that US debt. If they can't pay down that US debt, it means it needs to keep growing, and then it needs to grow to serve itself, and eventually it will suck up in a vortex and take everything with it. So Sam said he went up 150 billion in the last 2 days. How could the RBA go in the upcoming cutting cycle below 1%? I'm excited for the rest of the devaluation of the currency. I literally dream about it. Also, Happy New Year. Welcome back. Thank you. I'm so excited for when it happens. A lot of people, when they start seeing rates cut, there'll be bad news when they'll say, oh, we're in a recession, there's this going wrong, that going wrong, maybe a black swan event. But that's the time to be excited, because that money, it becomes like a tsunami, right? They push up the rates. They did quantitative tightening. Was in essence what they're doing at the moment is tightening the currency And you don't. It's like a tsunami, right? If a tsunami hits, everyone that's survived a tsunami, um, when the tsunami hits, you don't just see a big wave come in because of whatever happens in the earth. The tide goes all the way out, and people go, "Wow, look at that! There's all sand, all the water's gone." Right? If you're ever at the beach and all the water goes out, get the fuck out of there and get to the highest point in ground, because when a tsunami comes, everything gets sucked out, and then it all comes crashing back in. And literally, we're going to see a tsunami of debt come back in the markets. They're taking that liquidity out, but when they have to fix it, there will be a lot of a tsunami of debt coming our way, which is good because the debt gets marked down, it becomes worthless, your assets go up, and higher inflation hits the scenes, and happy days. So on that note, that probably couldn't come quicker for these folks over in China. We talked about this maybe 2 years ago, 18 months ago. Evergrande. It is the largest property developer in China. I call it Evergrande because it's a fucking time bomb. It goes into liquidation, over $498 billion of debt. That's nearly $1 trillion worth of debt, right? There's $500 billion, right? And they say that the largest companies in the planet are, closing in on $1 trillion and whatnot. This is a big company. Goes on to read, after a painful 2 years of struggle to survive, the firm has collapsed with debts mounting in the hundreds of billions of dollars. Embattled Chinese property juggernaut Evergrande has plunged in liquidation years after it racked up debt in hundreds of billions of dollars. A Hong Kong court ordered the company to go into liquidation on Monday afternoon. It comes after Evergrande was spared from the same fate in December when the judge granted the business a 2-month extension to come up with a debt plan to pay back its foreign investors. But they were not able to present a convincing enough case, and now in the law's eyes, the company has ceased to exist. The collapse has left a fate of 1,200 projects at varying stages of completion in jeopardy. In 2021, the property developer earned the unwelcome title of the world's most indebted real estate firm after getting into debt for a tune of $408 billion. This figure has since raised to $498 billion. This has also sparked China's worst ever property crisis, generating fears of a contagion effect in the property sector locally and abroad. Many were expecting the Chinese government to step in and bail out the crumbling business. That's liquidation will no doubt send shockwaves through the international community. Just go to think about this, right? If we see, let's say there's this photo here anyway. I've got no idea what it says on the side of the building, but let's just assume all those properties there, right? And the company goes into liquidation. The reality is that all those properties are still there. They just change hands from one caretaker to another. Right? And a lot of people think, oh, it's so bad, or whatever the case may be. Well, everything still existed. It's just that the books and the back end of it just change hands, and this person owns this, and this is who the owners of this is, and that's how it's structured now. So, is it a big issue? I think there's been a big issue. These things could be there for advantages for certain people in certain powers and stuff like that. Certainly, the same things have happened here in Australia over the last, specifically 2 years. I've seen a lot of development stock go under, a lot less building coming in the market, but interesting nevertheless. So, yeah, my thoughts on that. Is it going to have a big effect? I'd love to see stuff like this happen in Australia. The reason why I would is because I'd love to be able to go in there and pick them up and get them on the cheap, but I just don't see in our market. We're not seeing 600 million people moved to Australia last year, or 650,000, sorry, moved to Australia, and we've got 25, 26 million people, however many people we've got. That's like 2% population increase, would it be? About 2% population increase. I'm not seeing the increases of people flowing into China, right? I'm not seeing people flow into these locations. So it is a very different sort of market, because as people migrate to Australia, then it absorbs a lot of any issues like that. So interesting. Someone said here beforehand, I've noticed that a lot of rent has been going down a bit. I haven't seen that really happening much. I haven't seen it happening at all, actually. If anything, I'm seeing them go up. This time of the year, like Christmas time, New Year's time, a lot of people don't want to keep their properties vacant and stuff. So if the property's vacant, they might offer a week's free rent or a cheaper rent or whatever. People are in holiday mode, not moving. So around this time of the year, you might, if I was a tenant and I was trying to move house, I would want to move over Christmas because you get yourself a good rental deal over that period because most people are on holidays and stuff like that. So besides that, I'm seeing markets heat up massively, so which is really exciting. And this article here goes to show real estate sign is going viral over a small detail that exposes a rental crisis. A real estate sign outside a two-storey home in suburban Melbourne has gone viral over one small detail, which is that goes. A sign of the rental suburb Melbourne home has exposed how competitive the rental market is, with your action just showing how furious and fed up Aussies are. The Melbourne suburb Coburg, a real estate agent, placed a sign on the property letting the community know that not only had the home been leased, but it had been leased for a record price in that area. Think about it, right? It's like people sit there and they go, they've got a record, suburb record, right? They're literally putting suburb records on rentals now. It's amazing. It's not amazing for everybody. It's amazing for those that have got the assets because their rents are going up. It says here, the standard just lease sign is typically slapped on hot properties to show how quickly real estate agents have secured tenants for landlords, rather than boasting about how much money those tenants are paying. An Aussie snapped the photo of the record price sign and posted on a popular real estate forum to vent. Is this something to be proud of in a housing crisis, they ask? Depends what side of the fence you're sitting on. There's the sign there. For at least for a record price. I've certainly seen that a lot over the course of the last 12 months. Really, really massive. Like, I've got markets where we're renting out properties and like 70, 80 people come through an open home and they're offering $50, $100 over the asking price for the property, which is very different to what it used to be. And markets don't always go up like that, but I think it's a reflection of inflation. Some of the things that say in these articles are relating. It's not anything to do with Ukraine or China or Corona or anything like that. It's to do with money printing, manipulation of economic data, and there's just flowing into all different markets. So it goes on to say, who would be so proud of how much you just fucked someone over that you wanted to put a huge sign out the front celebrating it? Well, if we look at the flip side of that and look at it from a landlord perspective, I see on a daily basis, I reckon 90% of agents screwing owners over on the property. Sorry, just seeing the comments coming through here. Just keep the comments coming. I see a lot of owners that have got their properties under rented out there. So this market gives the opportunity. Still at this point, right? Like, I just did a deal today and we're rented out in the same complex, right? I won't say exactly where the property is. It's in Queensland. So the property is rented for $270 a week. The agent just signed another 12-month lease. The tenant had been in there for 12 months. Should be about $360 a week. And they just signed a new lease at $270, so $90 a week less. And it's like, it's so bad. It's so bad. But anyway, I find it nice, and I might get hate for supporting that. But as an investor, I'm like, well, that's just a part of the market, right? It's a part of the cycle. But the opportunity is out there, and I think everybody should be looking at their rents. I think everyone should be reassessing the rents and seeing what opportunities they've got in their portfolio to put their rents up and be a part of it. I've seen some of my investors, like just last year, I've seen some people just with a mere 10 properties, right? Put the rent up $100 here, $150 there. People with modest portfolios getting $1,000, $1,200, $1,500 a week extra rent over the last 12 months. Yes, your interest rates have gone up, and you might be thinking, well, they've gone up by $1,000 a week, but the rent doesn't really go up because the rent's just keeping it line. And that would be a very fair and valid fact to have. But just remembering that everyone that's not in your position that has a mortgage they have to pay themselves, or whatever, $1 million mortgage, they have to pay that mortgage increase themselves. You've outsourced that to your tenants. But when the interest rates come crashing down, as we've seen in the past, it doesn't necessarily reflect on rents reducing either. It just causes a new boom to occur. So yeah, interesting to see out there. Make sure you're on top of those rents and you're not being screwed by your real estate agent. I'll read Sam's point here. He says, inflation date comes out tomorrow. If it comes in around 3.5, hopefully there'll be a massive imminent rate cut indication if it keeps coming down as quickly each month. It would be one thing, and we can tell, like, just go out there and talk to people, see the sentiment of people, speak to local businesses. You'll see that we're in a recession. We've been in a recession for a very long time. However, there's other factors. Like when we look at the US market, those rates start crashing, we have to follow suit. Otherwise, our currencies start getting debased, and it's no good for us either. So this is my final article. It's just a little snapshot, because I'm not going to spend and log into this one, right? But this is from the Telegraph in the UK, the UK's news website of the year. This is an article from 22nd of January, and it says carbon footprint of homegrown food 5 times greater than those grown conventionally. Crazy, eh? Crazy. They're now saying that if you grow food at home, it's 5 times worse off than buying food from a shop. Right? Oh, I can't deal with it, right? What is my thoughts of 2024? I think the news and media is going to get crazier and crazier. I think that we're going to see a lot more. I just think we're going to see a lot more craziness happening out there as the media has to support a pack of lies. I would think if you're growing your food at home, right, you've got some veggies and carrots and I was actually thinking I walked around my garden. I was on the phone to someone. I was walking around my garden picking up stuff, and in my garden I had like about 100 eggplants, right, and then thousands of chilies, right. I ate chilies all day, and like they're lollies. All this vegetable that was coming out of the garden, right? And I think, how can they say that there's 5 times greater carbon footprint for having those vegetables grown from your home? Because if I had to go to the shops, let me tell you, I'll be hopping in my truck and be pushing my truck on and driving down, burning lots of petrol to get to those shops to do certain things. So why is this even relevant? I saw Justin beforehand. Justin says thoughts of tokenization of assets and property. We are heading into a cashless society. I think 2024 we're going to see a lot more of this propaganda about climate, propaganda about war, propaganda about geopolitical, propaganda on certain minority groups that are, doing good things, but they want to attack and break down family units. As we do enter into a world of more digital, more control, in that security network. So that's just some of my thoughts for 2024, not trying to be negative or anything like that. So I'm going to turn to you guys and answer your questions. I'm going to just open up a bottle of sparkling water. Not that it's sponsored, but I like my glass bottles of sparkling. Give me 2 seconds, folks. That's good. I'm going to turn to you guys, ask me questions. I'll answer them for you. Do I have any other things that I was going to talk about? Some of the things I was doing at the start of the year, I had a little note here on this screen over here. Some of the things I've been working on, I've got some more renos that I've been working on. I've got some videos that I filmed over Christmas, which I'll get uploaded shortly. We're going to get some cool content. I'm actually going to spend the night here filming some podcasts for you guys because I filmed enough up to about now, but I'm out of podcasts. So if you have any podcast ideas, flick a few comments below and I'll get into filming podcast after we do the Facebook Live today. I've been working on a lot of deals, lots and lots of deals for our investors out there, for myself, some of my goals this year. I've talked about at the end of last year, I want to buy another 100 properties this year. I think we're in a very interesting time because as we get once we see rates drop, when they do drop, there's a flood of people. If we did that, I wish we could do a poll. I don't know if you can do a poll in here, but anyway, you guys don't need to answer it. I might get my team to do a poll, just a general poll on our Facebook wall. So if you're watching this from a different channel or whatever, go to the B.Invested Facebook wall and have a look at a poll. And we'll share it around. Let's do a little task out there. If you can't service to buy a property today, right? I know thousands of investors that would love to buy a property, but they don't service. Interest rates have gone up, so they don't service. In the meanwhile, their rents have gone up, so their income's increased a lot. So when you look at the bank's calculators, they're looking good, but just with the high interest rates and when they do their servicing calculators, it doesn't stack up for them. But if the interest rates were coming down tomorrow and you could afford to service for a debt, would you be out there buying a property? So that might be our poll, right? Something around that. If the answer is yes, how many people are out there that want to buy a property that haven't jumped into the market yet, right? We know that it's imminent, whatever day it comes, that rates will come down. That'll mean that thousands, millions of people will be able to service for greater levels of debt, meaning that more people will be heading into that market and then prices will be going crazy, right? And I plan on taking advantage of that. I did that in the start of Corona by buying motels. I've done that in 2010 buying 2003, 2008 buying housing commission houses when the government was dumping state housing. I was buying all their houses. I used to buy thousands of those properties for myself and for my clients. And I see it as a great opportunity. And one of my big goals this year is to be in there buying the same things as you guys. So it's, I always do that, but my goals ramped right up. And I'll be buying them in tranches and more like a commercial style, like more like a hedge fund is how I want to treat my portfolio. So my portfolio will be, I'll be viewing it more like that. I'm going to buy 50 properties here this month, put them in a company, bang, buy another batch, bang, and I feel like the idea clicked to me whilst I was planning and relaxing and looking inwards over the break. So I'll keep you posted on all that stuff shortly. So Matt says, at least with the extra carbon, your vegetables will grow quicker. Yes. Would you wait 1 month extra or rent it out $30 cheaper for a week for now? If you're waiting to get the highest rental on a property, you've got to work out 1 month that, I don't know what your rental is. Let's say it's, I don't know, $300 a week rent. That's $1,200 you're going to lose. $30 over a year. It sort of weighs out each other. So you need to make a commercial decision when increasing the rent or leaving the property vacant. Sometimes, depending on where the property is located, if it's in New South Wales, for example, I will rent the property out for a 3-month lease as a trial lease for someone, and give them the $20 cheaper. But then after 3 months, I'll be like, okay, you're a good tenant, we're cool, let's do another 6-month lease, but the rent's going to go up by $50. And at that point, you enter into a longer term lease, and then you've got the ability to control it. So, you need to be, commercial with your dealings with tenants as well. So, Fergus says here, where do you see interest rates by the end of the year? I said last year that in January last year, my words were, I don't care what happens with the interest rates in 2023, but they'll be lower at the end of 2023 than when they were at the start of the year. And I predicted that we would see a rate cut by the 1st of July 2023, which didn't occur. And I was wrong. And I admit when I'm wrong, because it's obvious. And secondly, I don't think I was fully wrong. because that's when we started to see a change in monetary policy. So I was early to the thoughts on reversal of monetary policy, but it was not a reversal that we saw. We saw the stop of increasing, and we did see one rate hike at the second half of 2023, which people got scared by. Who cares? Like, who gives a shit? Like, the market's going to come crashing down, so it doesn't matter. But probably a little bit early on that front. But I've been yelling it out, saying everyone's got interest rates going up. Like, do whatever you want with it. They're going to come down, and we're at a point where now the mainstream's talking about rates will be coming down. Where exactly will they go? I've said it very clearly over the years. I believe we'll end up in a negative interest rate territory. We have to be. It was impossible for us to get over the 50 basis points, so we couldn't sustain more than a 0.5% interest rate hike from the start because our currency is so screwed. When they went over, I was like, they're going to come down, and it's going to be fun, and it's going to be fireworks, right? $34 trillion in the US market, $150 billion worth of increase in a week. That ain't sustainable. You can't do that with rates higher than 0.5%. They have to be at zero interest rate policy. And ZIRP is a thing, ZIRP, zero interest rate policy. And they're going to come crashing down. And they'll come down to where they were, maybe lower, maybe a little bit higher. In that 1% band is my view. Make a gamble based on whatever your decision is. Don't take me as financial advice, but that is my view, and that's what I'm banking on. I'm taking actions based upon that as well. What is the future of the property market? I think property market, that's a very broad range question. The property market has been booming a lot. Some markets have been going well, some haven't. There's still properties in Sydney that are cheaper than what they were in 2024. I can pick up properties in Sydney cheaper than what they were in 2016. So it depends where you're looking. The property market isn't one size fits all. There's different markets that are out there, concurrent sort of markets happening. So take advantage on what you see the opportunity being in is my advice for everyone. Sparkles here says, Godfrey's has been in business for almost 100 years, just gone into administration. These things happen. They say that they go into administration, but when you look in the business, Trump's got into administration, dozens of times, right? People that are in business know how to use that for their benefit. So, I think that will survive. It's interesting the amount of restructuring that's occurring out there. I saw that Sarah Lee got bought by another funder, and I think a lot of these companies that are getting into trouble are getting into trouble because they used to get lifelines of liquidity and injections of capital, right? And capital used to just flow around out there in the markets, but it's not finding a home. And I did say in 2020 that I wasn't a fan of the paper market being shares and stocks and all that sort of stuff. And yes, they've gone up a lot, and everyone can say, the markets have gone crazy, ASX is good and all that sort of stuff. Dow Jones is going great, all that. But there's specific companies that are in there, there's injections of liquidity going to certain hands, and it's just not floating around like it used to, which is what's causing these things to need to happen. So, interesting. What else have we got here question-wise? Big rates, big tax returns, it's bittersweet. Yeah, you can look at it from that perspective. You can claim more stuff on tax, but I'm not in the business of trying to get a tax deduction. I'm in the business of creating wealth. What do we got here? Hey Nathan, the recession that we're in now, will rates go down a lot when they lower the rate soon? What about longer terms becoming normal soon, or the longer interest only? If we go back, every time there's a recession, they've manipulated currency, right? They've manipulated loan products. I remember my parents telling me as a kid, they bought the house that we grew up in, and it was $13,000. And the house now, I was talking to my mum the other day about it, it's probably about $1.5 million for the house. And, 13,000 was a lot then. They had to put down a 50% deposit. My dad was the only one working in the house because the family unit was strong back in the day. people forget that in 1992 they traded childcare. They then packaged the wife up to go and earn. So now you've got two people in the household working. They send the kid off to the hands of a stranger to raise them in a bulk format. They create a new financial product around childcare rebates. They've now got two tax slaves out there working. Mum and dad are both working, paying taxes and all that sort of stuff. It becomes a new normal, that they call it. They never talked about it. They just sold it in a different way. But yeah, my father had to put down, he had to go to the bank and put on a Sunday best. You go and put a suit on and go down to the bank and put your case forward. I want to buy a house, got 3 kids, whatever. And the loan product was principal interest, no such thing as interest only. You had to go to the bank, put your case forward. It's very different. Like you pick up the phone, you've got like piranhas, you've got mortgage brokers. Hey, you make a comment and you probably got some bloody scary mortgage broker trying to sell you their mortgage wares. It's a very different market today than what it was back then. You can get interest-only loans, you can get guarantor loans, you can get this, you can get that. So there is always new things coming into the market because banks need to grow their books to grow as a business. And if the property market crashed, then the banks would crash too, and then the financial system would come crashing down too. So they need to generate more loans to have more debts on their books for their shares to go up, and their share market needs to survive on the back of the property market surviving, and it all comes down to generation of capital. So will they manipulate loan terms and length of loans and all that sort of stuff? You betcha. When they do reverse monetary policy, I talked about just couple of moments ago, they will be coming down a lot. So that's just my view on it. Luke says, what are some of the example deals you're working on? Good question. I post them, like the team post them every week. Check out Instagram, check out the Facebook pages. I see them. I don't go on social media much personally, but check them out. When I hop online, I see them pop in the newsfeed and stuff like that. I put on there just basic numbers of the deals, and we're picking up properties for 100 grand, rent for $200 a week, picking up deals for 200 grand, rent for 350 a week, picking up deals in capital cities for under 300 grand. Major capital cities, Sydney, Brisbane, Perth. Some of these are new properties, 2 bedrooms, 3 bedrooms, rents at like, got one the other day for $320K, 3-bedroom unit, rent for $500 a week. They're out there. The deals are out there. Andrew says, "Hey Nathan, I love the potties and live stream. Mates, random question: have you had much experience with buying land locked properties?" When you say a land locked property, I'm assuming you mean without a driveway or without a road. They're sometimes called a paper lot. I have bought paper lots back in the day. I used to buy land, right? This is funny, right? People will be like, oh, that's a lie, right? I remember once, I forgot I bought a property. I was 24 years old, and I think I rocked up half drunk, and I bought this thing. It was, I don't even drink nowadays, just for the record, but I did rock up drunk with this thing, and I bought it for $11,000, and what was it? It was a block of land in Riverstone, New South Wales. Google it, right? Land starts at like 700 grand, 800 grand now. I bought this thing, and I bought like lots of them. I used to buy them all the time, and I'd buy them for 10 grand and sell them for 40 grand and just flip them, basically. And I made some money from it. It was cool. But they were paper lots, and that was my experience with paper lots. And they didn't have any civil works in them. They didn't have roads out in the front. They didn't have certain things. They were just raw land. It's like you're buying in a paddock. It looks like 20 acres of land, and there's just bits of fences and shanty towns and people storing shit on their blocks. There's no roads, bits of dirt, bit of dirt road, whatever. If that's what you're talking about, there comes a lot of risk with them. You'd be wanting to get them for next to nothing. I thought it was cool, 20 grand, 10 grand, 5 grand, whatever. But if you're paying like 200 grand or something like that, I don't see the value in them. So it depends the risk attached versus what you put into it. Jessica says, do you find a difference using a big name real estate compared to a smaller one? No. The name of a I'm just reading Lee's one. We'll get to that in a second. Um, when you look at a real estate office, they're all small, right? Like real estate agents are just real estate. They're just like mum and dad Poch Limited, right? If you look at their front doors, every real estate office has their PTY Ltd trading as, and it could be an LJ Hooker, a Ray White, whatever. They're just a mum and dad, but they pay a franchise fee. And some of their franchise fees might be X percentage per year of revenue. It might be like a $30,000 marketing one. I've looked into them over the years. I own real estate agencies out there, right? Like just random, right? I own real estate offices out there, not just my own ones, but other ones. And out of those real estate offices, like they come with they're just people own them. So what are you getting different between one or the other? You might feel confidence in a brand or something like that, but most of them are just marketing names out there. So the real difference of the real estate office is their systems, their processes, their signs that are out there. For us, with what we do with like Blink Property, we don't really need the signs out there because it's not selling stuff like that. We're predominantly just asset managers. But there's some agents that are more pro vendor and some that are more pro just doing a deal. It really comes down to the individual working in the individual office is my personal experience. And the reason why I set up Blink Property 12 years ago now, actually 12 years ago, is because I saw too much inconsistency, and I'd get one office that I'd go to, I'd have a property manager there, and property managers turn over, right? It's very high turnover in the property management space. They'll leave 3 months, 6 months, all that sort of stuff. And I'd see inconsistencies because I'd be like, that was a great property manager, but I'd seem to have to follow them around because I couldn't, the next one was like pro tenant and, it would cost me money and all that sort of stuff. So that's why I built Blink to be more pro landlord and bring stability in that sort of space. So yeah, it comes down to the individual in my opinion. Lisa says here, a video is going around about me, Nathan, in 2014 on a current affair in your Jeep, New Money. The number plate was New Money. 28 years old, buying ex-housing commission houses. Very good. Thank you, Lisa, for sharing that. I didn't know. I'm not even on TikTok. Sometimes people share with me like documentaries that have been on, like Sunday night, I think it was. The documentary was in a helicopter flying over the Gold Coast, and I was like, this is like I think I said it was like the Miami of Australia, and Sydney's in New York, where all the CPI comes from and GDP comes from. Sorry, but yeah, I've seen people sharing. I haven't seen that one. I don't even know what it is. Thinking back, that was many years ago. But thanks for sharing that, Lisa. What do we got here? Next one is Stephen. Hey mate, late to the party tonight. We'll have to watch the recording. Good to have you back in the new year. Likewise, Stephen. I look forward to catching up with you later this week. Thanks for answering my question. Then hello, Mr. Hyperinflation. Then hello, Hyperinflation. Exactly. I'm very excited for that. I think people should be concerned by hyperinflation. I see all the joy, I see all the fun, I see all the exciting parts of hyperinflation, but I also see the fear. I see the bits that people aren't going to be aware of. That's not being able to afford your own food, that's not being able to afford lots of different things out there. So hyperinflation I'm excited by, but it also brings fear to me because I'm thinking about how other people will be impacted, and I'll probably have to be the one wiping people's asses around me closely to make sure they're safe during the hyperinflation, because not everyone's set up like you or I would be. So, but exciting times. I'm very excited by hyperinflation. I think, and I said that many years ago. I said the hyperinflation won't start for another 3 years, and that was about 3 years ago, maybe in early 2020. I said that, and we're now early 2024. Inflation's kicked in. I said it won't start before 3 years, and it will definitely be happening till the end of the decade, maybe 3, 4, 5 years cycle of it. So we're right in the eye of when that's going to be coming, and anyone with assets, they're all going to go up. You're not going to become richer because of it, but your debt's just going to be worthless. So yeah, be prepared, folks. Be prepared. Andrew says, where do you think the next opportunity will be? Capital cities, which ones? Rural, how rural, where? Any state preference? What happens if repossessions go up? Will the market ever go down? Will this ever occur? Thank you. Well, I can tell you where I buy, but then I'm giving away my IP, and that's what I specialise in. So if you want to buy cool deals, that's what I focus on for my investors. You get on board, just send us a message somewhere. But as per hot spotting, I'll give you a big tip here. I buy in every city constantly. Yeah, I don't sit there and go, oh, this is a hot spot, we better go buy here because it's going to go up. I could go into an area and just manipulate the shit out of it and buy 1,000 properties, and the prices will naturally go up. But it's not sustainable in the long term. I want to look for things of value, and value is what I'm an investor for. So if we look at what's a hot spot, I could sit here and tell you the Gold Coast, very hot, everything's gone up. Look at the stats, everything's tripled in the last 3 years. Right? $200,000 property is now selling for $600,000. The problem with that, for someone buying in there at $600,000, is that the risk is cooked into that deal. That deal at $600,000 could go to 1.2, but what's the chance of it going to 1.2? It's very slim because it's already just gone up 3 times. It's not going to go and double again. But if it does, what's the chance for going backwards? It's much higher. But when it was at 200,000, like we're buying for 7 years or 8 years, very, very much so. Much of you guys have been buying in those markets. They were terrific buys. They didn't appear as terrific buys on the day, but they were of good, strong intrinsic value. And there's plenty of places still out there where you can buy those properties. It is getting harder to buy stuff under 100 grand. It is getting harder to buy stuff under 200 grand. But they still are out there, and there is still opportunity. So you want to factor in the risk versus the value. And there's a big difference between cheap and a bargain. A bargain is something of good value. A cheap is just cheap because it's cheap and nasty. So yeah. I hope that helps. How long before the rates fall, do you think? Just remember that in March 2023, we saw Credit Suisse go under. We saw like banks just blowing up, and how they bailed those banks out, they gave them some liquidity and funding, and they were 12-month funding packages. So those funds, and we're not talking about like here's $500, go sort yourself out, or here's $1 million. We're talking hundreds of millions, billions of dollars that were created on short-term loans, and those loans have now got up even greater. Right, the interest rates got up, that debt needs to be rolled over. So they were all around March. So just think about March as being a bit of a time where the grenade pin is being pulled, and things are going to be kaboom, right? So my thoughts would be, considering around that March time, I think will be fun. Wait, where are we at here? Where are we at? Bloody hell, missed the whole hour. That's all right. It's a good time to replay it. Godfrey's were still selling vacuums filled in the 1970s. That was the problem. Farmland, yeah, if you want to buy farmland, there's opportunities out there. You want to make sure you've got, certain things. I've got farmland that's like on the other side of the Great Dividing Range. I'm looking for sunlight in there. I'm looking for water, access to water onto the property, inability for people to really get to in a crazy time. It depends on the property what you're after. Do you want it to be coastal? Do you want it to be there's all different things. What do you want the soil to be like? What do you want to do on the property, etc. Ex-housing commissions from Mounting County was the good days. Yes, the good old days. Hey, buying out at Mount Druitt, used to go out to auctions, and everyone would rock up in like a sports car, and I'd just be a dickhead, and I'd go up to auctions and I'd like intimidate people, go up and be like, oh, I'll put another five grand on top, and they were fun, but they don't do them anymore, which is a shame, but they were good fun times. And you've got to move with the markets, you've got to move with what's happening out there. Um, Michael says this week the unions and a few PM were toying with limiting people to 3 investment properties for negative gearing. It was apparently laughed off by Albo and Chalmers. We'll wait and see. Look, they can do whatever they want, right? Negative gearing is not a thing that won't be good. It won't be good. They've tried so many times. I think that they have learned you can't touch it. But negative gearing sucks anyway. And if I was negative gearing, I would have been scared a long time ago. Um, but yeah, I don't see it. If negative gearing got scrapped, there'd be less people investing, people selling their properties, people holding on to things. Because when you change a law like that, a tax law, generally the old things get grandfathered, and a grandfathering means that whatever it is, if you own the property today, then you'd be safe. But if you buy the property after this date, then it would change. And that's why you've got capital gains tax and depreciation effects from 1985 and 1988, and it changed over the years, and they were locked in. So if you bought a property before 1985, you wouldn't be subject to capital gains tax. You could sell it. You buy it for $50 and sell it for 50 million today. You wouldn't be paying a cent of capital gains tax in there. So, yeah. Um, been carrying for you for years, like a touch and regard. I don't know what the go is there. How's the fish farm going? I went home and I picked up some fish the other day. I just put a net in to scoop up some, see how they're growing, and some of them are coming along pretty nice. So, Chris says, I can't believe how cashed up people are, still considering interest rates. Everyone's spending like crazy. There's a lot of money out there. Like when you really think about it, anyone that bought a property for a half a mil and it's now worth a mil, they've got a shitload of equity, an absolute shitload of equity. But if they can't service that, there's a point when the system seizes up, and that's why you don't feel the shock straight away when interest rates go up, because it's not affecting everyone, but it affects um, you know a little bit down the track, because when that runs out or when the brake seize up. Um, what are we looking at here? Um, Andrew says here, thank you. Yes, just general thoughts. Interesting to hear you better buy everywhere all the time. Yeah, everywhere I buy. Regarding surviving hyperinflation with groceries, etc., what do you think we need to survive? Obviously, we can keep putting our rent in the properties. What about gold, silver, Bitcoin, etc.? But a big fan of Bitcoin. I laughed at my mate one day. He was talking about Bitcoin. He had like 10 grand of them, and I said, sell them. He needed 10 grand for something. He sold them, and he said, oh, they doubled. They went from $500 to $1,000 or something like that, 250 to 500. And then I went and bought half a Bitcoin for $500, and then it doubled overnight. I was like, what the fuck is this thing? And that was maybe like 9 years ago. And I was like, I shouldn't laugh things off, right? That was an interesting understanding of what Bitcoin was. And I actually had thought about certain aspects of Bitcoin before I even knew it existed, but more around creating a system like that around silver, gold, and whatnot. I'm a big fan of all of that stuff. Um, is gold and silver going to save you? Is Bitcoin going to save you? I think all aspect. I created the business and called it B.Invested for a reason. It's an investment firm. I love all investments. Property is my favourite go-to, but yeah, there's certain things you can do to try and protect yourself. Anything apart from cash is good. In a time like now, there's lack of liquidity. So if you had gold, silver, it's not really soaring in value. And if you look at things like silver, silver has gone backwards from where it was 10 years ago. So it doesn't always necessarily go up, but I'm a big fan of it, and I think everyone should have access to little pieces of it and just continue to grow those positions. I buy a property, I'm happy to buy some gold and silver and other sort of crypto assets. I don't want it all being in that one little place as well. So, and this is just more about keeping liquid in the grand scheme of things. Having access to food and water and electricity, and I say electricity because people think electricity is normal, right? But what about if inflation comes and the power company can't afford to buy the coal to run the power plant, and then you're in a position where you can't run your air conditioner or you have to you know ration your power. You want to have access to energy sources because we never know what's going to happen there. Adrian says, my house sells this weekend at auction. I'll be speaking with your team very shortly. Been 8 years in the making, finally here. Good luck, Adrian, for your auction this weekend. Hopefully that your house sells and you get the price that you're after. Always here, been here for 15 years, so here to help you when you're ready to get the ball rolling. So, where are there? Lots of questions. Zach says here, how long between the start of hyperinflation and the currency reset, where the pop off the zeros? We will need to pay out all debts before they reset it. Correct. I thought on the timeline depends how. I've never been through a reset like that, a currency crash. All things that I see, there's lead up times and there's certain stages that it goes through, maybe 3 years, 4 years that it could take. We've probably started in there, but the real activity, like you will know when it's time to get out of debt, right? You guys will know when currency devalues itself that much that you need to get out of debt. To say that a hamburger could cost $10,000 for a Big Mac might sound stupid, 10 grand for a Big Mac, but if the average wage is $2 billion a week, and your old mortgage that's locked in at 250K, it becomes irrelevant. So, that's the cool thing. Sorry, it's talking too much. Need some water. 1/3 of properties don't have a loan, correct? Yeah. But the market, if you don't have a loan on your property, the liquidity in the market is coming from loans. So I'm happy for people to go get a loan out there in the market and to come in and enter the market, because then that inflates my asset, because my assets are part of that marketplace. So yeah. I know that there's a lot of talk about Phil Anderson's 18.6-year property cycle. Do you think that will come into play? I hear all these theories about certain things that are happening out there, and I've heard of this beforehand. I don't agree on that, no, because it all comes down to the currency and the liquidity going into the market and coming out of the market. We saw a syringe of liquidity come in 2020, sorry, and we're seeing trying to take that injection out of liquidity. And I don't mean to be a play on words with injection, but they're trying to take that liquidity out, but they can't, and they're going to have to re-liquidify. That cannot just be forecasted on a chart. These are things that they need to go in, and you will only see the outcome. It's like saying, I like to make analogies. I'm trying to make an analogy out of this one. Let me think for a second. Right? Let's say we're driving down the road, and it's going to take us 1 hour to get from where we are to where we want to be. And I don't know, someone's jumped off a building and splattered on the road, and you're on a standstill, right? We don't know, does that person jump off before you drive through that area? Do they jump off afterwards and the car behind you gets? There's hurdles, and that's a very bad analogy, right? There's things that will come and change that course of direction throughout that journey. And you can't just say, well, it's going to happen exactly like on this time. I've looked at it. I disagree with it. I've seen those charts where it's like the 9-year and 18 and all that. I disagree with it. So, yeah. William says here, Nathan has lost weight over Christmas. Thank you for noticing that. I've been working on myself this year, and I'll try. I actually started losing some good weight last year, putting on big muscle. Trying to get back to the good old days, eh? So, for some reason, I just comments just fly off the screen. I'm scrolling. Why would someone do negative gearing? It means you're going backwards. Exactly. Well, people don't have the right knowledge, so they just think, let's trust the advisor that said to buy this glossy brochure property, which is negative cash flow. Michael says here, I believe there is a lot more growth on the Gold Coast, Nathan. Lots of cashed up Southerners and foreigners. I've lived here all my life. In the 2000s, I was buying for 80 grand. There's a lot of buyers nearly taking population growth here in the Gold Coast next 10 years off 1 million people. I don't know where they're going to live seriously. Look, I'm not discrediting. I always said, this is one thing I did say very clearly, is that, like, if we look down at Leonard Avenue area, right, you're on the Gold Coast, you know what I'm talking about, like in that little pocket where there's all those little units and stuff, Chevron Island around there. I was picking up stuff there, like you mentioned there, like 80k, 100k, those sort of figures, 150k. I remember I had a client, and I did a video at the front. He never spoke to me again because I did a video. I said, some idiot, they're a dickhead, they didn't buy this property, right? And I bought it, right? And it was nothing special, it's just like every other property I was buying. But half the properties that I bought in my portfolio have been from my clients, frustrating me. I'm like, fuck it, I'll buy the thing, right? I'll buy the thing and I'll do a video out the front of them. And in that pocket, I always said that would be like, it reminds me of North Sydney, right? It has the ability to go all the way up. And there is more potential for it to have, but the potential was good to start at, 200 grand, not at 600 grand in 3 years, and thinking it's going to go to 1.2. If it goes to 1.2, fucking happy days. But the risk is greater. I could see better value buying something different at that point. So that's all my view is on it. It's just my view, and I do think there is a lot of growth there, like massive amount of growth. But yeah. Phil Henderson sounds like a con man. I don't know him that well to make any comments like that, but I just, I don't, Kane says here, Birch using superannuation to buy property as opposed to typical super generates F all for ROI. I'd love some advice. I'm going to discuss that, right? I'm going to discuss it in a very hypothetical scenario. If we look at any of the regulators out there, they love to watch my videos and they like to say, oh, this guy could be giving financial advice. I don't do that, but I can talk in riddles and tales for you guys. If someone was to have 200 grand, let's just say in their super, when you have that 200 grand, let's assume that your super fund went up by 5%, right? 5% for the year. And if you look at it, it's really not doing that, right? And they take out all these fees and stuff. And Wolf of Wall Street was a video about some con men doing dodgy things and crazy stories or whatever. I think those same people operate in a commie super fund environment. You don't know what's happening with your money. You're just told to shut up, leave it in there, respect the chart, all that sort of stuff. If you have 200 grand, I'd be questioning where exactly is that money? What is it invested into? I want to know exactly what's going on, right? They might say it's invested in the shares. Okay, well, what shares? And see how they're really performing. If someone was to take their 200 grand, and this is just hypothetically, and they were to use that as deposits, right? They could possibly buy 500,000 worth of property. And let's assume that did go up by 5% as well. Well, the difference is that you've got 200 grand going up by 5%, which would be a 10% return, or you've got 500 grand going up 5%, which is a $25,000 return. So you've got the power to leverage. You can, if you want to go and sell it off, you can buy some shares, sell some shares. You want to buy some gold, sell some gold. You can do what you want with your asset, but when you've got a new super, you're really open to whoever those faceless people are at the back end, playing with your money. So I personally got a self-managed super fund maybe like 10, 15 years ago. I think that for me it's been very good. I've seen it being very good for lots of people. I've seen people do terrible with the self-managed super fund, and it's very highly regulated. You need to get the right advice on that front. If you want an advisor to give you advice on that, reach out to the team. We can put you in contact with the right people. I don't have that much confidence in financial advisors because they like to sell you shares and manage funds. And it's funny, right? You go to university to be a doctor and you can talk about what products you can sell them, right? Tablets, whatever the case may be, right? And no disrespect to the medical industry, it's done lots of great things for lots of people, including myself, and family, all different people around me. But if they say, hey, the doctor can't sit there and say, hey, your blood pressure's high, you're fucking drinking too many Red Bulls, you're fat, whatever the case may be, something's wrong with you, you need to change your lifestyle, they will lose their license, right? But they're allowed to say, hey, your blood pressure's high, here's some tablets, go take it on, here's some new tablets to try and lose weight, whatever the case may be. If you go to a financial planner, they can only tell you what to buy out of this box. They're not really, I've never seen a wealthy financial planner, is what I'm trying to say. And they get paid commissions for selling you shares and all that sort of stuff. So you need to be very cautious of where you're getting that advice from. It's called a self-managed super fund for a reason. You should be your own financial advisor, making your own educated decisions. So yeah, you do need to get advice, but you need to get the right advice, you have the right people around you, and if it doesn't make sense, don't do it. So yeah. And Nick says here, hey Nathan, who on your team do I talk about self-manage my super? I want to get better gains. Sorry, just scrolling back to it. To get to the point where I can buy property with it as well, or at least talked about the pros and cons. Reach out to the team. If you can, I forget who your investor relations manager is. I don't know if it's Wayne or Pat or whoever. Just speak to them about it. I'll have a bit of a look over your position. I'll put you in contact with the right people to talk about that with. So, Lecky says here, hitting the gym, Nathan, looking good, mate. Thank you. Yeah, I've been to the gym almost every day this year, getting those fucking shoulders and chest, and you can't really see it because anyway. I'll wear a singlet one day for everyone. No, I won't do that. Brenda says here, can you give some thoughts about the government cutting back on migration? I think this will smoke and mirrors. They will say they're slowing it down, but they'll continue to let heaps of people in. A way of printing ourselves through debt. For us to pay our debt of $1 trillion, we need to have tax revenue. For us to have tax revenue, we need to push those taxes up, but they can't. They're saying that they're giving tax cuts to people, make them feel better, use $100 here, $100 there. But inflation is pushing those wages up, so they're making more cash flow on the increased income that's coming through. So it's just a Ponzi scheme on top of a Ponzi scheme. But we need more people as tax slaves to pay those tax dollars. We can't get there quick enough from breeding. People aren't breeding. They've got to go work and struggle through life. So the quickest way we've got is to import tax, and for us to do that is to have migration. So it'll be political suicide, financial suicide for any government to cut that back. It would. There's pros and cons to it. I like the fact I was actually chatting about it the other day to one of my mates, saying, just keep bringing all migrants in, right? It's that Ponzi scheme is really great because we're all doing really well out of it. So yeah. Luke says here, hey Birchie, is self-managed super fund considered a separate entity for borrowing capacity? Yes. Without going, a lot of super fund questions coming at me, and as I always say, I'm not a financial advisor, so what I do say is more for educational, and just it's my little disclaimer for you regulators out there wanting to watch and say that I give financial advice, because I don't. And but yeah, you ask me a question, I'm just answering a generic question. Is a self-managed considered a separate entity for borrowing capacity? Yes. In your super fund, a lot of people don't realise that the self-managed super fund itself is its own entity. So when the banks take servicing in, the loans are non-recourse. So if, let's say your loan went bankrupt, bank repo in your super, you're not the one that's liable for it, it's a super fund. So that's why there's lots of strong regulations around the type of property. It's basically an asset lend. It's like commercial lend, it's an asset lend in there. So if you've got contributions going into your super fund, then that is what the servicing is based upon. So that doesn't get considered outside of that. So if you do go down that road, you can reach out to the team, and we can help you out. I'll get Wayne to be in touch tomorrow with you, Nick, and maybe if you want to send me a text message, Nick, about how much you have in your super fund, that's a good starting point, and then I can put you in contact. The doctor has a license to steal. Well, I think there's a lot of people out there that are doctors and in the medical trade that want to do great and wonderful things out there, but I do think that they are limited in what they can do. There's my politically correctness for the day. But I don't think doctors are out there to do bad, but definitely the last few years, I think that it's shown that they don't look at what they're prescribing so much. They're trusting in blind faith in the drugs that they're selling. Let's call them drugs or weapons or whatever we want to call them. So anyway, folks, I'm back. I've actually quite enjoyed spending my Tuesday night with you tonight. So thanks a lot for tuning in. I'll be back every fortnight. As I said, I'm going to do some podcasts shortly, filming some podcasts. I'll be back out on Thursdays. You can find the podcast on Google Play, Apple Play, Spotify, and YouTube as well. But yeah, thanks a lot for tuning in. Hopefully you guys are all prepared for a big and exciting 2024. Hopefully you've sort of looked at your goals, worked at your goals, got a good plan. It is the end of January. We're 10% of the way through the year. Don't fuck around and have a year lost of not achieving and getting yourself not to where you want to be in life. So if you need help with anything, you can reach out to myself, reach out to the team, flick us a message, give us a buzz, 1300 367 925, and yeah, happy to help where we can. We'll catch up soon. Have a good evening, and bye for now.